Welcome to the deep dive. Today we're getting into something really practical. The secret to staying on budget month after month. Because, we've all been there. You make this great budget, you feel really good about it.
Right, you've got the plan all mapped out.
And then somehow halfway through the month, it's just, completely off the rails.
Yeah, it's like charting a course perfectly, but then, life happens, currents pull you away.
Exactly. That's frustrating. So that initial budget, that's like step one. But sticking to it, that's where the real work and the real results happen.
Absolutely. Sticking to it requires ongoing attention. It's not a one and done thing. That's the secret, if you can call it that. Consistent checking and adjusting.
And that's what we're diving into today, this whole idea of monthly budget maintenance. It's not just looking back, is it? It's more proactive.
Exactly. It's a system, a way to keep your financial plan, working for you, optimized, aligned with your goals. It turns budgeting from maybe a chore into a really powerful tool.
Okay, so why is this regular checkup, this monthly maintenance, so absolutely critical?
Well, think about it like this. It's kind of an early warning system for your money.
Okay.
When you regularly look at your spending, you spot the small leaks. That little impulse buy or a charge you didn't expect, you catch them before they become a flood.
Right, before they completely sink the budget for the month. Those small things really add up.
They do. It catches the whispers of overspending early.
I like that analogy, a financial early warning system.
Yeah.
What else? Why else is it so vital?
Well, life isn't static, right? Things change. Your income might go up or down. Unexpected costs pop up.
Like car repairs or a surprise bill?
Exactly. And even your goals might shift over time. So monthly maintenance gives you the flexibility, the agility to adapt your budget to what's actually happening. A budget that's too rigid, one that can't bend, it's probably going to break under real life pressure. It's about building in that financial resilience.
That's a great point. Acknowledging that things change and having a way to deal with it. What about the things we automate? Like transfers and payments?
Yeah, that's another huge piece. We rely on automation for savings, bills, investments, which is fantastic.
Super convenient.
Totally. But it's not completely set it and forget it. Monthly maintenance makes sure those automated things are actually, running correctly.
So checking that the transfers actually happened.
Right. Or maybe an old bank link is broken or a transfer failed because the funds weren't quite there on the right day. You catch those silent errors that can really mess things up.
Yeah, okay. That quick check can save headaches and fees down the line. And maybe the most important reason, how does it affect our mindset?
I think this is maybe the most powerful part. Doing this consistently reinforces your motivation. It keeps your financial goals right there, front and center.
How so?
Because you're actively seeing the progress or maybe where you need to improve. You're making conscious choices. It shifts budgeting away from feeling like, a restriction.
Yeah, like a punishment sometimes.
Exactly. And turns it into this active, empowering process. You're building the future you want intentionally.
Okay, that makes a ton of sense. So we get why it's important. Let's get into the how. What's the absolute first step to doing this monthly maintenance effectively?
Preparation. Always preparation. Like getting your ingredients ready before cooking.
Right.
You need all your financial pieces. So bank statements, checking, savings, all of them. Credit card statements, any investment summaries you get. Bill statements.
Okay, bills too.
Yep. Receipts, if you keep them for certain things. Reports from your budgeting app, if you use one. And, this is key, the budget you set for last month. You need that comparison point.
That sounds potentially like a lot of stuff together. Any tips to make that less overwhelming?
Definitely use digital tools. Most banks, credit cards, apps, they let you download statements and reports easily. The trick is just getting it all accessible. Maybe a dedicated folder on your computer or cloud storage. Just streamline collecting it.
Okay, so gather the digital paperwork. Got it. What's next? Do we just dive right into the numbers then?
Almost. Before the numbers, set the scene. Create the right environment.
What do you mean?
Find a quiet spot, somewhere you won't be interrupted constantly. Aim for, say, 60 to 90 minutes. Treat it like a serious appointment.
Okay, dedicated, uninterrupted time. That can be tough, but I see why it's needed. What tools do we need?
Your computer or tablet, obviously, for the documents and your budget tool. A notepad and pen can be useful, too, for quick notes or questions that pop up. And, of course, access to whatever you use for budgeting, spreadsheet, app, notebook, whatever works for you.
Got it. Dedicated time, quiet space, tools ready. Any pro tips for making this a consistent habit?
Yes, here's a big one. Schedule it. Put it in your calendar for the same time each month.
Make it recurring.
Exactly. Ideally within the first, say, 5 days of the month. That's usually when all the previous month's statements are ready. Consistency is everything here.
That's smart. Predictability helps. Okay, documents are gathered, space is set, time is blocked. Now we hit the numbers, starting with income.
Precisely. Step 1 of the analysis, income review. Look at the actual money that came in last month, salary, freelance gigs, investment returns, anything, and compare it directly to what you projected in your budget.
And what are we looking for there? Just if the numbers match.
You're looking for variances, any differences, bigger or smaller, and crucially, why they happened.
Okay.
Did you get a bonus? Work overtime? Or maybe a client paid late, so income was lower. Note that down. Especially with variable income, spotting patterns helps you budget better in the future.
Right, understanding the why behind the income number. Got it. After income, where do we look next?
Then you dive into expenses. Step 2, expense category analysis. This is where you see where the money actually went.
The nitty-gritty.
Yep. A really good way to do this is with a simple table. Columns for budget category, budgeted amount, actual spent, variance the difference, and super important, a column for notes.
Okay, a table helps visualize it. So for each category, groceries, transport, fun money.
Exactly. Compare budgeted to actual. Calculate that variance. Then, in the notes column, explain why there were big differences.
Like unexpected car repair or ate out way more than planned.
Precisely. Understanding the why is where the learning happens. It shows you your habits, where you might be drifting, and look for trends. Are you always overspending on, say, dining out? That's a red flag.
Okay, understand the story the expense numbers are telling. We've covered the flexible spending. What about those regular fixed bills?
Good question. That's step 3, the fixed expense review. Even though they're fixed, you still need to check them.
Why? Don't they just stay the same?
Mostly, but not always. Look for rate changes. Sometimes they sneak in. Check if due dates have shifted. Be aware of upcoming renewals, like for insurance or annual subscriptions.
Ah, so you don't get caught off guard by a renewal.
Right. And it's a good time to ask, can I reduce this? Could I get a better deal on insurance? Negotiate my internet bill. Is the service level still right for me? Remember Sarah's internet bill example. Those little unnoticed hikes add up.
That's a really good point. Vigilance even on the fixed stuff. Okay, we've looked at money in, money out. What about the systems we set up, like automation?
Exactly. Next up, check your automation systems. First part is the banking automation review.
Meaning?
Verify all those automatic transfers are still set up right and working. Savings transfers, bill payments, investment contributions, debt payments, anything automated.
What are we checking for specifically?
Confirm the timing. Is it still lined up well with your paydays to avoid overdrafts? Are the dates optimized so bills get paid on time but not too early? It's usually quick, but prevents frustrating errors.
Definitely worth checking. What's the other big automation area?
Subscriptions. Oh, the subscriptions. It's so easy to collect them.
Tell me about it. That free trial you forgot about.
Exactly. So do a subscription audit. Again, a table helps here. Columns for service name, cost, last time you actually used it, keep or cancel decision, and action needed.
Ooh, last used. That's brutally honest.
It has to be. For each one, check the price, any increases. How often do you really use it? Is it worth the money? Are there cheaper alternatives? Note the renewal date so you can cancel in time if needed. You'll likely find money leaking out here.
I can almost guarantee it. Okay, so income, expenses, automation checks. What's next in this monthly rhythm?
Next, you shift focus to your goals. Goal progress assessment.
Okay.
This means consciously looking at how you're tracking against your big financial objectives. Emergency fund, debt payoff, saving for a down payment, retirement contributions, whatever your key goals are.
How do we measure that effectively?
Look at the current status. How much is actually in the emergency fund versus the target? What's the current loan balance? Calculate the progress, maybe as a percentage. Seeing $5,000 saved out of $10,000 goal, 50% complete, is really motivating or clarifying.
Right. It makes it tangible. What if the progress isn't great?
Yeah.
What if we're falling behind?
That's okay. It happens. That's when you need a goal adjustment process.
Yeah.
First, figure out why. What are the obstacles? Overspending elsewhere? Unexpected costs.
Identify the roadblock.
Yes. Then, be realistic. Do you need to adjust the timeline for that goal? Maybe push it back a bit. Do you need to change how much you're contributing each month? Update any automation linked to that goal, and then create new specific action steps to get back on track. It's not about failure. It's about adjusting the plan.
Makes sense. Be realistic, adjust, keep moving. We've looked back at the month, checked goals. What about looking forward?
Crucial part. Future planning. Look ahead maybe the next 3 months on your calendar.
3 months. Why so far?
To spot the bigger, less frequent expenses coming up, things like insurance premiums, property taxes, maybe holiday spending, planned travel, car maintenance.
The lumpy expenses that can wreck a single month's budget if you're not ready.
Exactly. By seeing them coming, you can adjust your sinking funds. Those are your savings pots for specific future costs. Figure out how much you need and adjust your monthly contributions to those pots so the money is there when the bill arrives. No surprises.
Proactive saving for the big stuff. Smart. Anything else for future planning?
Yes, think about seasonal changes. How will the upcoming season affect your spending?
Like higher heating bills in winter.
Yep, or AC in summer, maybe new clothes for the kids for school, holiday gifts, travel costs during peak season. Anticipating these seasonal shifts lets you adjust budget categories before the spending hits.
Okay, looking back, looking forward, we've done a lot of analysis. What ties it all together?
Documentation and action planning. You need to summarize what you found.
Like writing a report.
Doesn't have to be formal, just a summary. Key observations. Big variances, things that went well, challenges, any patterns you noticed.
I write it down.
It helps you track trends over time. It's a reference for next month. But most importantly, it includes your action items, specific things you need to do based on the review.
Like call the cable company or just grocery budget.
Exactly. Immediate budget tweaks, research tasks, calls to make, changes to automation, concrete steps.
So the summary leads directly to action. How do we translate that into next month's actual budget?
That's the final step of the review itself. You take those insights, those action items, and you adjust next month's budget accordingly. Update category limits, change automation settings, tweak goal contributions, plan for those upcoming expenses you identified.
So the review directly shapes the plan for the next month.
Precisely. It's a cycle.
This sounds thorough for the monthly deep dive. But should we be doing anything, I don't know, more often in between?
Yes, definitely. Those monthly deep dives are crucial, but quick weekly checks are super helpful too.
Weekly. What would that involve?
Keep it short, maybe 15 minutes. Just quickly scan recent transactions, make sure they look right, categorized okay. Check your budget category, balances any danger zones, glance at upcoming bill alerts. Quick confirmation automated transfers are set. Just staying lightly connected.
Little course corrections during the month?
Exactly. Prevents big surprises at the end of the month.
Okay, so weekly quick checks, monthly deep dives. Any other time frames?
Yeah, it's good practice to do a quarterly assessment too. Every 3 months or so.
What's different about that?
It's a bigger picture view. Look at your long-term goals. How's the overall progress? Review investment performance. Check if your insurance coverage is still adequate. Maybe pull your credit report. It's more strategic.
Weekly tactical, monthly operational, quarterly strategic. Got it. Now, things still go wrong sometimes. What are common problems people hit, and how does this maintenance help?
Okay, common one. Always overspending in one category. Like, consistently.
Yeah, the fun money category, perhaps?
Could be. If you see that pattern in your monthly review, dig into why. Look at the last few months in that category. What triggers it? Stress, social situations.
Find the root cause.
Yes. Then decide. Do you need to realistically increase the budget there or create specific rules like only 2 takeout meals per week? And use those weekly check-ins to really watch that specific category closely.
Proactive troubleshooting. What's another common snag?
Automation failures. A scheduled transfer doesn't happen or a bill payment fails.
Frustrating.
Totally. If you spot that in your review, first, document it. When, where, what failed, then check the basics. Enough funds, correct timing scheduled, linked account info still right. Update anything outdated immediately. And maybe set up backup reminders, just in case.
Good plan B thinking. Okay, this process is really clear now. To help listeners get started, could you maybe structure it like a checklist across a month?
Sure, that can help make it feel manageable. Think of it over 4 weeks.
Okay, week 1.
Week 1 is your main review time, ideally early in the month. Gather documents, do the income analysis, review all expense categories, the table method, check all your automation, update your tracking tools.
Got it. Core review in week 1, week 2.
Week 2 could be for auditing subscriptions, reviewing goal progress in detail, adjusting savings allocations if needed, checking investment contributions, making initial updates to budget categories based on week 1 findings.
Okay, goals and recurring costs focus in week 2. Week 3.
Week 3 is good for future planning. Look ahead for big expenses, review insurance needs, check credit card statements carefully. Verify regular bills are on track. Update your emergency fund status.
Future focus and verification in week 3 and week 4.
Week 4 wraps things up. Finalize that monthly summary observations and actions. Set the final budget for next month based on everything. Do one last check on automation settings. Plan for any seasonal impacts coming soon. And crucially, schedule your next monthly review. Keep the cycle going.
That's a fantastic, practical weekly guide for the month. Okay, for someone listening right now feeling motivated, what's the immediate action plan? What should they do today or this week?
Okay, 3 simple steps to start. 1, schedule it. Right now, open your calendar, find 90 minutes in the next week, and block it out for your first monthly budget review. Make it non-negotiable.
Step 1, commit the time. What's step 2?
Start gathering the documents we talked about, bank statements, bills, etc., and set up your review space quiet, focused. Get ready.
Okay, schedule and prepare. Step 3.
Create your system. Find a checklist you like, maybe online. Set up a simple spreadsheet or choose a budgeting app if you don't have one. Decide how you'll track things and note your actions. Make it easy for yourself to follow through.
Got it. Schedule, prepare, systemize, and the final push.
Commit to consistency. Set reminders for those weekly checks. Schedule the monthly reviews ahead of time. Put the quarterly ones on the calendar too. Maybe tell someone, a partner, or a friend that you're doing this. Accountability helps.
Schedule it, systemize it, commit to it. That really does sound like the path to staying on budget, not just for a month, but for the long haul.
It really is. This regular maintenance, it's not just about numbers. It's about building a mindful, proactive relationship with your money. Making sure your financial plan is actually working for you, helping you reach those big goals.
Yeah, a successful budget isn't static, is it?
Yeah.
It needs to live and breathe and change with you. This maintenance system is how you do that. You're actively shaping your financial future.
Exactly. So the question to leave you with is, how will putting a regular maintenance system in place change how you feel about your finances? What new possibilities could that unlock for you?
That's a powerful question. Listener, take that first step. Schedule that review. Start taking that deliberate control. Thanks for diving deep with us today.